Debt is one of the largest prohibiting factors on a company's growth. If a company cannot create a positive cash flow stream by limiting debt and increasing revenue, they will not successfully be able to increase their business operations, which will ultimately have a negative effect on their share price. By answering what is the current ratio of a company, how to calculate the current ratio, obtaining the working capital ratio, knowing what a good current ratio is, and how to use the current ratio, we will be able to assess a company's ability to manage their short-term debt obligations. Current ratio, sometimes referred to as the working capital ratio, is a fundamental metric which measures a company's ability to manage their debt, more specifically their short-term debt payable up to 1 year. This is done by comparing the company's current assets against their current liabilities. Current assets include both cash the company has on hand as well as their liquid investments that they are planning to cash out on within the next year. Likewise, current liabilities require any debt that the company has an obligation to pay within the upcoming year. Although you can calculate the working capital ratio dividing the current assets by the current liabilities, it is somewhat difficult to gather the information needed to obtain these preliminary numbers. I suggest you use Yahoo Finance to gather the current ratio of a company you are doing your due diligence on, as it can be found on the Statistics tab under the balance sheet portion of the page. If a company has a current ratio under the value of 1, this signifies that said company currently holds more short-term liabilities than they do short-term assets to cover these. It is not the end of the world, as this fundamental metric only gives us short-term insight on a scenario in which case all the short-term debt was due at a single given time. However, the lower the current ratio of a company, the more difficult time they will have managing their short-term debt obligations and growing their business operations, because they're lacking in way of substantial cash flow. On the other hand, a company with a current ratio with a value greater than 1 is a much safer investment, as they can stay solvent in the short term up to a year, as their liquid assets cover their debts. You also must remember that current ratio only judges short-term sustainability. If any deal is made where a company takes control of a tangible asset, such as real estate, this will not be reflected in the current ratio. Similarly, if the same company takes on a large long-term debt obligation, which is not payable until 3 years from now, this will also not be reflected. Although a working capital ratio below a value of 0.5 can be nerve-wracking for investors, the best way to use current ratio is by comparing the companies which you were analyzing to the sector average and to that of other successful companies within said sector. This is because each financial industry requires different operations of the businesses which fall in them, and current ratio is not the appropriate fundamental metric to compare companies which are in different industries, as one industry may require a successful company to take on more debt than another industry. At the end of the day, the current ratio is a telling metric on management's ability to manage their short-term debt obligations as well as their business operations, and this gives us insight on future outcomes and share prices of the company. With that being said, it is not the most accurate depiction of a company's long-term success, as it is constantly changing every day and should not hold you back from investing in a company which you believe has strong fundamental metrics and will grow. If you enjoyed this segment of Fundamental Fridays, where we look at a separate fundamental metric each week, I want to remind you guys to subscribe to the channel and turn on the notifications. Check back next week to further your fundamental analysis. As always, I'm Patrick Zimmerman. Thank you for your time and have a nice day.